But private capital is part of this conversation as well. So there remains, doesn't there, a valuation disconnect between private and public assets in the alternative markets as well?
I think that's right. The question is it sufficient? So there's two parts of the private capital side. You look at private equity and then you've got private credit. Now, if we stay with the high net worth, private equity has been a long-standing allocation. Private credit, it's quite nascent, still an early stage for them. So we're looking at the balance there and saying, are we giving enough of a return, risk-reward return, above and beyond what we can get from the public markets? The answer for us, as far as we're concerned as an asset manager, is yes, we can provide that. But investors, their sentiment and their movement is there.
I'm curious, what are you telling these ultra-high-net-worth individuals whom you have met with or are about to meet with in terms of this split, private equity and also private credit? Because it seems to me in a rising interest rate environment, and things just repriced for even higher now in just the last couple of days, the private credit side, distressed debt, may be looking pretty interesting right now.
Fully agreed.
Okay.
Fully agreed. And I would even say it's not even the distressed. So if you look at within private credit, even if you go into the mid-market senior loan space, so this is looking at companies which are 30 to a 50 million EBITDA range, maybe slightly higher, 70 million EBITDA. You can pull out with one turn of leverage. We're now pulling out 10, 11% total return. Very attractive. Ooh. So distressed, absolutely. But I think there's still attractive propositions a little bit further down the security line.
How alternative is alternative, Simon, in this environment where you've got cryptocurrencies, post-FTX, here be dragons, regulatory risk, etc.? Sure. Is there any interest at all from clients in that particular sphere, or do we really need to see some guardrails on that particular asset class?
So, personal view on that would say is, look, I do think there needs to be some guardrails there. Crypto, I don't know whether I'm showing my age now, but crypto is something I find quite challenging to understand. It's not what I would consider a traditional alternative asset class. So for alternatives for me would be, and for us, would be very much, commodities, real assets, real estate, infrastructure. They're the key areas of focus for us. Then there's the periphery, as you've rightly mentioned. But I think there needs to be quite a few guardrails. I agree.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to the channel for more. Thanks for watching.